In Money Watch, inflation is not the only thing hurting Americans' wallets.
That's right. The rising cost of consumer goods, coupled with the stock market's decline, is taking a devastating toll on their retirement plans. This year's sell-off has put U.S. equities in bear market territory, erasing more than $3 trillion in value in retirement savings alone. It's the most severe market downturn since the start of the COVID-19 pandemic. Let's bring in John Leer for more on this. He is the chief economist at Morning Consult. John, thanks very much for being here. So let's just start with some basic definitions. Terms like bear markets, interest rate hikes are being thrown around a lot these days. Not everyone might understand what that means. So let's start with the term bear market. Define that for us, and how long is this bear market expected to last?
Yeah, thanks for having me on. So I think there are, obviously some commentators who can disagree at the margins around whether or not we're in a bear market currently or not. Conceptually, what that means is just that we are, the stock market remains essentially down fairly significantly relative to where we were at the beginning of the year. And that, stock prices, of course, are significantly lower than they were earlier on.
Nearly $3 trillion, and that's with a T, dollars in retirement savings were erased this year as a result of the sell-off. Who is this market downturn impacting the most?
Well, that's a great question. I think it does impact different demographic groups very differently. That's something we see a lot in our data. I do think it's important to keep in mind, that it remains somewhat of a luxury or somewhat of a luxury these days to have access to a 401k plan. That's not true for all Americans, particularly people who are doing hourly work. So the decrease in the stock market, of course, is going to most directly hit people who are fortunate enough to have some money invested in the stock market. That tends to be higher wage earners who have, salaried contracts.
Well, the cost of consumer goods and just everyday living is going up while the markets tumble. For Americans who are watching this take place and are seeing no end in sight to those high prices at the gas pump, at the grocery store, what is the advice to them as they watch really whatever savings they might have kind of vanish, really get eaten into by these higher prices?
It's certainly a tough time right now, and we see that a lot. We know how much Americans are suffering across the income spectrum, particularly lower income Americans who don't have a lot of discretionary room for discretionary spending or additional savings buffers. What we've seen over the last 3 to 4 months is a pretty dramatic reallocation of consumer spending away from those discretionary purchases towards necessities. And as gas prices and increasingly grocery prices as well increase and start eating into consumers' other spending categories, we're now starting to see sort of an outright contraction in spending. And in fact, we saw that most recently in the retail sales numbers, with real retail sales turning pretty strongly negative. And so it's a tough time to be a consumer. I think that the elevated gas price situation has fairly profound impacts on not only obviously gas prices, but all the other goods and services that rely on gas prices as inputs. And so I think it's going to be a very, very tough year, particularly over the latter half of this year for consumers.
Yeah, I think we have to keep in mind that 10 years ago, we were coming out of a recession. We've seen increased stock market prices, a real bull of a market for the last decade. It will be interesting to see how long this point lasts. And we certainly hope, John Leer, we make it out of here as well as we did the last time around. John Leer, chief economist at the Morning Consult. We thank you.
Thank you.